Okay, good evening, everyone. Today's date is 17th of September 2023, and it's 11:30 p.m. here. This Sunday, I've not had time to do analysis for some days now. Very busy. And I'm just here to talk about the entire market in general, and what I see and what I have at hand to trade. So, generally, what I'm seeing here for gold is this, what's it called? So I'll just talk about gold in general, but I don't think I'll be focusing more on gold this period. I think I'll focus more on EURAUD and GBPAUD for this week that will come, because that's where I'm finding very good trades as it stands right now. So this EURAUD, and let me show you what is going on EURAUD as we speak right now. So but let me run through gold first. So this is the daily chart of gold. This is a weekly chart of gold. Are you getting it? And this is a monthly chart of gold. You can see that. Um, to me, gold is bearish because the previous month was a hanging man. Previous month for gold brought out a hanging man. Are you getting it? This is a hanging man, and gold is a bearish. But what are we seeing right now? We just need to, a lot of people don't check the monthly chart or their charts. Anything that happens to gold, I will not be, as in surprised, because this is a sluggish move around the major support areas of the monthly. So anything can happen in these areas. Trade can decide to, not float according to the right market structures. Market manipulations might come in. So generally, this is where gold has been. If we put this trend line here, or let me, try and make this big, you will see that where gold has closed and opened in the monthly is still here. Are you getting? This was the last close we had for gold here. So I think that was 1,919, 1,916 area for gold. So drop it down to the weekly, and the last high we had for gold was this whole area of 1968 to 1980. So I like looking at my support and resistance on both sides. Are you getting? So on the weekly, you can see that the market actually have a support and resistance at this area, and also have the last resort if you can adjust very well in this area. So we have this support, we have the resistance. So it's good that it's very important that you map out your areas of value as your major support and resistance out. I don't look at the market this way. I like, trying to look at market structure entirely, but it's important that you mark out this thing. So I'm not saying any other thing here than gold still being a bearish move. So if I should drop down to probably the daily, show you something what I'm saying here right now. If I should take all these, support and resistance off and follow market structure and how the market is trending. So the previous high we had was this. Then we'll have this other, one before this one came. So those are three touches for me, and I think is enough to complete my buyers as a what's it called, market structure and price action trader. So this is a bearish pressure trend line that I have coming from what's it called, the upside. I call it bearish pressure when the price touches that trend line, bounces off or break it and start going to the what's it called, the upside. So why I'm doing this is because of this move we had on Friday. I was not here on Friday, but I know I have a trade currently ongoing. I think that trade is here. Okay, I have this trade currently ongoing for me. So I will just go back to that particular um, gold chart and show you what I can find. So usually, if you're ever confused as to what's happening in the market, drop to your line chart. It will be clear there for you. So for me to see these two sharp edges, I consider them a temporary support trend line. Are you getting it? Support trend line. And according to the market itself, the bearish, as in the longer trend line, are much stronger than the shorter trend line. And we have just two touches here. We have three touches here. So I need at least three touches to confirm my entries before I can trade. So I'll go back to the candles. I think this is a bearish pressure trend line we have here. So a support trend line. So what is happening here? Is this a valid, what's it called, morning star happening to take gold and break gold above here? we were about to find out. So this is the daily, the hourly chart is what we use at Vision X to do analysis. So don't get carried away, just follow me up and I'll show you what I can find. So as it stands right now, we are in a symmetrical triangle in between here and here. Sorry. This is a symmetrical triangle I can find in between here and here. So anyone that breaks, take this market to that particular direction. So a lot of people, a lot of traders wait until this particular triangle either breaks to the upside or this particular one breaks to the downside. And don't forget, if you have been following, that's why they say trade only one asset so that you will not get carried away. And it's important that you go back to history. History is predicting as it stands right now that since the month of June, what has gold been doing? Gold has had this particular support that broke and turned to resistance before it broke and turned to support again, find resistance and broke down. I guess maybe before came back to 0.5, 0.61 again and came down, but we have not started going down. We're finding a little bit demand zone there. It's important that you know that this particular area is very important as it stands. I guess if I should take all these things off, you don't forget these sort of areas, which was an important area of value for you because it will come and help you again when going further. That's why I said trade only one asset so that you can understand what is happening in that particular asset market. So here is a major resistance. And what do you see me labeling all these places? Since we have major touches, either support and resistance, are you getting it? I call them your major areas of value. And what happened when we got to that particular area of value? We saw that we go to the 1 hourly chart. We saw that, okay, let me go to the, is it hourly or daily? Okay, let me go back to daily chart and show you something. I told you that, guys, that definitely will go down. Why? Because we had this change of character around this area, 1980 area, where we were unable to break and continue this market to the upside. I guess we actually did a change of character, break of structure, change of character to the downside. Here we found 0.382, broke to the downside, doing an ABC move to the downside. We came back, couldn't find what's it called, more momentum to the upside. That means gold became bearish and came down again, breaking structure to the downside. Whether I like it or not, the break is a break. And after that break, we retraced again. After every break of structure, what happens? We retrace to 0.5 or 0.618 kill zone. So if I should measure that for you, you will see that we retrace to 0.5, 0.618 kill zone. So why is the market itself right now breaking structure and trying to change character? The market can decide to do whatever it wants to do. Well, if you measure this, you see that gold came to what I call 0.5, 0.618 kill zone that we took our entry from. And we did a confirmation about that entry zone on the 1 hourly chart where we are looking for our, reversal chart pattern. And I found a 1 hour reversal chart pattern in this area. What's the reversal chart pattern? It was a head and shoulders pattern I found in that particular reversal chart pattern area. So this is a head and shoulders pattern. We'll do addition next. We'll wait for our particular, what's it called, chart patterns to, we follow, we are price action traders here. So that's the same thing we got in this upper side before we were able to take our trades. Are you getting it? In this upper side. So we usually wait for, not that we don't trade, but we usually wait for our chart patterns to, our price action patterns to form before we take trades at Vision X. So we got this and we got a breakdown from, and we tested, we came down, we came back again, took this liquidity out and used the head and shoulders pattern again to do what? To do an ABC move to the downside. So this is an ABC move we did to the downside again in this particular area. So this is an ABC drop-based drop, what's it called, strategy. The same thing that happened. The same thing that happened in these, what's it called? Look at, remember, the same thing that happened, drop-based drop. Then we came back, we couldn't break above, we broke down again. So copy this and just, this is what we had at the, the higher, what's it called, the major move. Is that same ICT? I call this ICT because ICT will definitely do what? If I should take this thing off. So I just want you to see something today so that when you are trading a particular asset, you don't get carried away and you are to expect anything that happens. So look at, if ICT could do that same thing and drop base drop and came back and couldn't break, what did you see that happened? They came back and took all this liquidity with this particular move, where it came back, as in, this is ICT liquidity for me. So since ICT has been in this market since June, I guess since June or even since May, I guess we had this major resistance. If ICT could do that, are they trying to do the same thing by coming back up to take everybody out? But when you are trading, what do you first of all look at? You look at even though it's a 1 hourly chart or lower time frame chart, you look at your major areas of value. And what can you see here? I was not around on Friday. I would have seen this particular, what's it called, move to the upside, knowing that I placed some trades around this area, knowing that the market is trending, I guess, the market has been trending to the downside. So what happened was that we did a low, higher low, we did a low again. So the market was just supposed to come back here and continue trending to the downside. But I don't know, maybe there's a fundamental that happened on Friday. If you drop to the 15-minute chart, you would have seen that the market was failing to, break to the downside. So you would have known that, okay, if the market is failing to break to the downside around this area, what's it called, this particular support area, resistance area, you should know that the market might want to escape to come and take all these liquidities out. Has liquidity to be taken? I don't think so. If I bring my horizontal line, this was the last high we had, it didn't take it. So definitely, I know gold. I know how this market behaves. Gold, we definitely want to come back and take that liquidity up to this bearish pressure trend line at 1935, 1936, from 1930 to 1935 area. And once you are saying that it's switching to the downside again, you find an entry around this area to sell, put your stop loss above that liquidity trend line or above 1940, which is the major area of value. I guess now I'm just breaking it down so that when you are doing your top-down analysis, you should know what you're doing. So I told my community that, okay, if this is what is happening, I think, where are those lines from? Okay, let's take all these ones off first. I think if this is what I know gold to do, it is a bearish pressure trend line. I think gold might want to come back, you getting it, to the upside to take liquidity. This is something I call equal highs. I get it. So this is an equal high. So gold usually come, according to good character, I've been following on for the past how many years now. Gold loves liquidity. So these are equal highs for me, where the market, I think I can find this structure out, where the market will come down a bit, I guess, and come back and take all these liquidities out before switching hands again and selling to the downside. And if gold takes all these liquidities out, so equal highs, or should I call it equal highs, or I should use the word liquidity? Let me use the word liquidity because liquidity is liquidity. It might continue going down, but gold might want to take these liquidities before going down. I guess gold might want to take all this liquidity before going down, but don't forget we have a major area of value here where the 1940 what's it called? Now look at, there is something someone was asking me, that why do I call these areas, what's it called? Why do I call these areas major resistance or supply zone? Is because I use something called price action patterns, and they are all called reversal chart patterns. Are you getting it? They are reversal chart patterns. Are you getting it? So to trade. So whenever I'm seeing a reversal chart pattern playing out in this sort of area, this was a bigger one that brought this move. This was another one again, I get in that brought this move to the downside. So to me, even though it's finding a little support here, to me, gold is still what? Bearish until this market does what? Follow up. What does the market do? Until this market does what? Come back, come down, then break above 1955 area, changing character to the upside. Are you getting it? Then after that change of character, what happens? What do we wait for again? We wait for 0.382 or 0.5 retracement. If you bring a financial retracement tools in, you will see that that's what it might want to do. Come back to 0.382 and continue trending to the upside, meaning that the market has done what? Reverse to the upside. So until I see this break above and a change of character, I am still bearish on gold. I get me. So I will only take a trade if a change of character happens to the upside and wait for a retest on where 1940 will now take over as major what? Area of value, major support, because it was support, turn resistance before it turns support again. I get in, it broke again, and right now we broke down again. So we must break above that major area of value for buyers to test it and continue going up. Until then, I am bearish. And why I'm not going to enter aggressively is because I don't want a fake out coming back to these areas. Are you getting it? So I will want a break above, change character, then a retest before an aggressive, as in I will not enter an aggressive entry before I will wait for a conservative entry to correspond with my area of value before I continue trading to the upside. But for now, I am still what? Bearish, knowing that definitely here is liquidity that the market might just come back around this area and you know what? Take liquidity, take a sniper entry, stop loss above here again, and continue what? Selling to the downside. I guess these are manipulation concept I have in my head already. And where I will sell again massively would be if this market do the same thing that it did around here. Look at now, see what it did, so that you don't get carried away. When the market broke down, did the CBC move? When it came back up here, what did it do? It had to switch to the downside before it took this 90-70 sniper entry. And what did it do? It broke to the upside. It came to the downside. It broke to the downside. Here became our what? Major supply zone, because we broke the structure to the downside. When we came back here, you see that we were consolidating around this area and broke structure again. So that was my confirmation that this market has done what? Switch to the downside, because if we continue breaking structures, changing character to the upside, downside, and break on structure again, coming back and finding this, this gap, and the market will definitely what? Make use of the next supply zone and start selling again, breaking structure to the downside. We should continue doing what? Form a head and shoulders pattern and switch back and broke below the 1940 major areas of value again. So these are things you need to consider before taking trades. I guess it depends on what you're doing. So when we came back to this major area, you saw that now I was clamoring that we might be coming back to this area to find what? Supply before we start going down. And take this home today. If you're a price action trader, it will help you a lot, because previously this was where the market did what? Broke from. Are you getting it? This was where the market did what? Broke down from and turned it into a major resistance area. So if this market actually turned this area to a major support that turned resistance and now came back and turned resistance again, why do you still think that the market has reversed? Until these areas, are you getting it? Until these areas break to the upside, are you getting it? And retest and turn support, you are not supposed to be buying. This was what we did here. I said this area must turn to a fake out, breaking above here, breaking above this, turning into a support file, go up and go up. I did that video. Same thing happened again right now. So the market is finding what? Resistance in these areas. I guess it's still finding resistance in this area. So the market is now trading in between this area. I guess it. So this move, everything you are seeing here is just noise. Everything you are seeing around here is just noise until a break of structure to the upside happens, changing this market back to the upside, which we'll call the change of character, before we can start doing what? Before we can start buying again. I get it. So for now, I think what Asian session does. Asian session does the liquidate. What's it called? The manipulation time. I guess it's switching above, breaking above all these. I guess it, then switching back to the downside again to start continuing the market to the downside. So don't get carried away when you are doing your analysis. Go back to what has been playing as I've been explaining to you ever since, because if this market actually broke to the downside, I guess it, why If this is a bearish, what's it called, a bullish market, why did it break structure to the downside and find resistance at the major what areas of value? Sorry. Why did it break to the downside and still find resistance at the major area of value? Are you getting it? At the major area of value. Why did it find resistance at the major area of value? And also, you know, still trending to the downside, because if you bring your Fibonacci tools in, you see that the market reversed from what? Our Fibonacci what? Q zone. And what is our Fibonacci Q zone? From 0.5 to 0.618. That's our Fibonacci what? Q zone. And you can see that it perfectly did not reverse from here. Instead, it came to 0.618 Q zone and reversed. So if you had a sniper entry 1950, 1948, congratulations, because you knew this was a major resistance and a major supply zone where the market found resistance. So it's just coming to take liquidity to continue going down. So whatever you are seeing here should be what considered as, the ICTs or the market makers trying to seeing large orders and using the opportunity to come and take liquidity before doing what? ICTs before doing what? Finding another, movement to the downside. So to complete my bias, for me to, because I've done my top down analysis, and I believe you guys have been following me right now, I still think we are still what? Bearish until this market does what? Switch, breaks above this particular. Now you can see everything playing out where the way I've been doing. Are you getting it? You have a lot of bias. And what are the bias? Your support turn resistance, your resistance turn support. So as it stands right now, if this market must prevail with this particular support, we need a break above 1950, changing this character back to the upside. So I need a break above here, not just a weak, a break. Are you getting it? Change this character back to the upside. Are you getting it? Then retest on this particular area of value areas. Then take a trade, is a buy, then put my stop loss below this 1918, what's it called? 1880, 1890 low. Are you getting it? Oh, no, that's too far. That's too far, sorry. Take my trade from here, then measure. It depends on, use my Fibonacci retracement tools to measure, knowing that after we switch character to change character to the upside, are you getting it? The market retraces just 0.318. If you are seeing retracing 0.5, we are breaking below. Remember, if you retrace 0.5, we are breaking below. Are you getting it? What's it called? Entering back into this figure. What's it called? Don't get carried away. We are breaking back into what's it called? The 1940 downside. Are you getting it? So coming back here, yes, it might come all the way back here, but we must find what's it called? I usually take my after what's it called? Change of character. I usually take my trade from what's it called? 0.30 or 0.382 areas, because I will not want this market to break back into here. My stop loss might be tighter, but I'll put it below this bearish pressure trend line or here. So it might just be like 200 pips to the downside. It depends on what I'm seeing on that particular day, because I'll be following the market up every 4 hours to see whatever is happening. So you don't get carried away. Everything I've been saying since is just analysis I've been doing all the way since June. So I've been following the gold market all the way since June, and I know where and what is supposed to do. So it's showing me everything that's supposed to do right now, that we need to break above this particular area of value or this Q zone to be able to be bullish. What again, retesting that Q zone, are you getting it there? Making sure you find support around these areas and use your candlesticks patterns like your bullish engulfing, hammer, and the rest of them to do what? To trend for you. So there was a hammer that happened here, and aside from that, if I was available on Friday here, I would have seen this particular movement like I've shown you before. I think I've shown you this particular movement. We broke above a particular support. Are you getting it? Since we broke above that particular support, even though it's a lower support, you should know that retesting it and finding this little, we're supposed to sell down to the downside. But since there were no sellers, definitely buyers took advantage and took these 4 hours and liquidate. A lot of people, they are stop loss, we are around these particular areas. But they've never finished taking the liquidity. But the market can still just decide to continue doing what, going to the downside like this. But what I know about gold is that you usually come back to take liquidity before going down, like what happened here. I've shown you that before. Like what happened here when the market did this. See what it did. It actually, let me just show you that this is what is happening right now. This area, this is what we have in this area right now. What did the market do? Market came back and took these liquidities, all these highs, took them out before, doing what? Coming down and switching to the downside. So if this market come down and go up and take those liquidity and switch, you should know that we're switch. So you are taking a trade probably back to these areas, then come back to these supply zones again. Again, depends on, it can play out anyhow it wants to play out. So watch out for this. Once you are seeing that supplies they are finding rejection in this area, these are conservative entry to continue going to the downside. Well, gold can do whatever it wants to do, because right now we are only trading in between this, movement, not we're trading in between that movement, not even this one, because the market actually broke structure to the downside here. We're not trading in between this one. So as it stands right now, the market is what? Still bearish. So I'm still bearish on gold. If you are holding your trade all the way from 19, this thing, what's it called? 1940 to 1942 area, 1950 area, leave that trade, because it might still continue doing what, going down. And this is a weaker vessel, weaker support. We have just 2 touches. 2 touches are not enough for me. I want to see 3 touches. I guess in it finding support again and breaking above. I guess in breaking above the trend line and retesting it. Then I know that I can take a trade, put my stop loss, and continue going. Because as it stands, whatever the market does is risk to reward. So if you're not ready to lose, you are too sober to lose, please don't learn how to trade. Don't even trade. I get in it. That's why they say risk and money management is important. If you over trade, you over leverage, you lose all your capital and you are thrown out of the market. But even if you lose your capital, what should you do as a trader? Trust me, what you need to do is come back with more capital, because whether you like it or not, if you're out of the market, you decide to quit trading today, the market will still wake up tomorrow and still move to either direction. So you are here to make money on the long run. Trading is the only business that guarantees your future. I keep saying that to my mentees and my community. Trading is the only business I've found that guarantees my future. Trust me, trading is the only business I know that no matter the losses I've made, no matter the losses, what's it called, anything that is happening to me in real life, if I wake up tomorrow, I have a little capital, trading can give me, at least feed me tomorrow and give me hope that no matter what you have lost, the market is still going to move to either direction, because I have the right knowledge already and the right mindset that I will still make my money back, or make money to even live, if not as large as I was before, build myself back with time again. Time is everything. I can build myself back again. So I call trading the safe haven to financial freedom. And as in, I'm the happiest person in this life becoming a trader. So this is what I have for you. If you are not ever confused, watch my videos over and over again. Follow market itself. Start from the weekly, the monthly, the weekly, the daily, your 4-hourly chart, and start using 1 hourly and 15-minute chart to take those entries. This is what I have for you on gold. Are you getting it? You should not be carried away, or you should not what is happening. There are too many trend lines, there are this and that here. If you watch my videos very well, you will see that I only combine all these sharp patterns, my candlestick patterns, my market structure, my price action, and whatever I see, to tell you that if this market breaks above 1940 again and reclaim it, we are bullish again. The market might do a joker back to the support trend line, which corresponds with this one coming from the downside, and continue going. But you should know that you should have a stop loss below here. Even though you are taking trades from these areas, the stop loss is supposed to be below here. Calculate your risk to reward, risk and money management properly. Stop using all those higher lots and tight losses. Yes, it's good sometimes, but until you are sure whatever you're doing and you're ready to take that loss, you should know that we are still trading in between here. So the other trade I have at hand is so sweet. GBP, what's it called? EURAUD. EURAUD has been very, 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 it has been very, is a great safe haven if I'm ever confused trading the, the USD pairs. Are you getting it? So Euro AUD has been sweet to me. Why did I say that? Look at all the way from all the way from 12 is 12 a.m. already. So the market has just opened all the way from Friday, April 2022. You'll find a large double bottom, a very perfect daily structure that has been trending perfectly well. We broke to the upside with this. We traced back. This gold has been very sweet using Fibonacci. How? Look at see what UAED has been doing. 0.382 was still the entry. And once a trade reverses back to the upside, changing character to the upside, what happens? This was a change of character we had. What happened? We trade to 0.382. So even though it takes you months or weeks to happen, are you getting it? You should know that you're not even supposed to FOMO, knowing that all you should be doing is what? Buying, knowing that we trade from 0.382. And when we trade from 0.382, where do we get to? 0.786 or 0.1, definitely must get to 0.786 or 0.1. Perfectly well, this was a from 52950 all the way to 6600. That's over 1,400 pips, right? 1,400 pips to the upside. So here we have been in this buy all the way from January of 2023. You would have left that trade to run all the way till 25th. That's about 4 months for to get 1,600 pips for swing traders or position traders. And what happens after that time? Look at perfect structure, very, very perfect. What happened? Look at we retraced again after taking profit, wait for a retracement again, back to what? 0.5, 0.618 Q zone. I had this trade where we had our previous support, where the market, started trending from. We had our previous support, and this was a previous resistance. So I labeled it an area of value, which I was waiting for what? A switch back to the upside to take another trade again. So I called this trade from 1.5. Well, check my June 15 to June, my June 15 to June, what's it called? June 15 video, I think. I did a video on this that we're coming back to these areas and we're finding, the market getting exhausted. Definitely, we are doing what? Going over 1,000, what's it called? 1,000 pips to the upside. Is it 1,200 pips? It was about 1,200 pips to the upside, which perfectly killed that trade. And why did we even do this ABC move to the downside? Because we broke structure. Look at, we broke structure. We broke this particular structure. Look at the major structure. Look at the major structure. This was a, major structure to the downside. So it was a major move to the downside. After that break of structure, the ABC move was what? Small. The ABC move was small, finding resistance at a 0.5 retracement level. So gold, what's it called? EURAUD has a perfect market structure. That's why I've been following it up and I've been trading it as a market structure trader. So I should take this off and take this off. You can see that we have a break of structure. So if this market is trending perfectly well like this, 0.5, retrace like this. So definitely we are supposed to do a 0.5 and continue going to the upside, which brings us to where we are right now. So we had a break of structure here that I will have here. I was waiting for what? A retracement to the downside. And for you to know that this market is still going to continue to the upside, I am seeing just sluggish movement to the downside. Why the, what's it called? The impulse is very, very large. The retracements are what? Sluggish. The retracement are sluggish. So that's giving me a vibe that the market is what? Still in an uptrend. I guess so. This is daily chart. So I'll drop to the hourly chart, or probably if I drop to the hourly chart, I'll measure this and put here and tell you that the market is either going to, continue from here to the upside, or because that confluence I have this what's it called, another block area and also a support area. Hold on. And also a support and resistance area. So there are a lot of confluences I use in trading this market. So if this market is tracing from 0.5, 0.618, I'll show you something on the lower time frame, which you will use next time, in confirming your buyer. So right now, we'll drop to the hourly time frame. Is there any candlestick pattern you're seeing on the hourly time frame? Yes, the market actually touched 0.5 exactly and brought what? Something called a bullish engulfing pattern, which is a reversal chart pattern that takes market back to the upside. Are you getting it? So a bullish engulfing pattern, when you see a bullish engulfing pattern, something is happening on the 15-minute chart or the 30-minute chart. And what is that? Look at, use your chart patterns to flow. Use your chart patterns to flow. At the 0.5 Fibonacci retracement levels, we had a what? An inverse head and shoulders pattern. So look at, we had an inverse head and shoulders pattern. Again, this was an inverse head and shoulders pattern, which is a reversal chart pattern according to price action trader. So after that, what happens? We come back to, we trace back to 0.5 or 0.6, what's it called, 0.382, and continue doing what? Trending to the upside. So what I have here is that we reverse to 0.382, but this market still have capabilities of coming back to retest the previous broken resistance and turning, now it has broken right now, turning to support. We can take our trades from these areas, and put our stop loss below here, which is about 1.6545 to 500. That's about 45 tips to the downside, which is a very, very good trade. If probably you were using one lot before, this is a trade that you can decide to, use 5 lot this time, because it's just 45 pips stop loss, not even 100 or 200 pips. So you can increase your, but watch out. If this market does what? Because we're price action traders, this market is not supposed to break below here. It might come down to this demand zones. Because this whole area comes with new demand zones. So the market, we must not, it might still break below. I guess to take some liquidities for people that we are using tighter stop losses around this area. But the market is not supposed to do what? Break below, even though it's a lower time frame. PD ranges. This is a PD range. This range is saying that the market is not supposed to what? Break below. Hold on. The market is not supposed to what? Break below this particular low. Because if you break below that particular low, it might do what? Continue trending to the downside. So that's why we say that your stop loss should be below. Are you getting? Because this was a move, the entire move. So I'll take this entire move and say that the market is either supposed to come to 0.382, I guess, and continue going up, or come to 0.5, 0.618 kill zone, which corresponds with our demand zones, and don't break below it. The moment you are breaking below it, this market is switching to the downside. This is not liquidity for you. This is structure, even though it's a lower time for structure. So it depends on how you analyze your market. So market is not supposed to break below this. It might come close to it, but don't break below it. Continue going on. That's why our stop loss is at this this underneath here. Again, so this is what I have for you. This is a very good structure, a very good trade that's coming for EURAUD. But I don't think the move is finished here. That's why you see that if it happens, it's happening on Monday, and especially new Asian session, I don't trade it. Why? Because I wait for something to happen first. And what is those things I wait for? I wait for, this market to do what? Since it has done a reverse head and shoulders pattern break and retest, I wait for it to do what? Break above again with a very good candle close. I get it. Then take my trade here and put my stop loss under here. So this will be like 600 to 6500, about 200 pips, good 100 pips trade. Put my risk to reward to it and continue doing what? Trending to the upside. Because I still have a lot of upside to go. This is just 100 pips I'm talking about here. Me seeing this market coming back to this area and breaking above again. I know I have 100 pips, and aside from that 100 pips, if we go back to the 4-hourly or daily chart, you will see that if this market truly does what, reverse from here, we are going all the way back to the upside. Let's take this off. Let's take the Fibonacci on and bring the Fibonacci trend extension tools and say that, okay, we're taking this trade from here, I guess, because we're seeing a reversal chart patterns happening there, reversal candlestick patterns happening on the 4-hourly chart, and what's called a reversal chart pattern, which is a reversal and shoulders pattern happening on the 30 minutes and 15 minutes time frame, whereby we know that if we have a reversal again, that means we are coming back to 0.618 or 0.5. From where we are right now is about 1,000. It's going to be about maybe 1,000 pips to the upside again, because EURAUD has been doing what? Trending perfectly well from the downside. Are you getting it? Doing is a perfect structure for me. So what has it been doing? Yeah, it has been trending perfectly well from the downside. No, trending perfectly well from the downside. Doing higher highs, higher lows, higher highs. Continue trending for you until it gets exhausted and start coming down. So since we have that, we should know that we have a trade. And what's a trade? Maybe entry from this area, right? Entry from this area all the way to 0.618 or 0.5. I guess so. Let's use 0.618 our stop loss 100 pips around this area. So look at the risk to reward, 20 risk to reward. Even though we bring it down here, it's the 8 risk to reward. But on the 1 hourly chart, we're talking about using 100 pips here. So I'll just label this. I'll label this as we are trying to come to 535. So our entry will be 535. Our stop loss take profit level will be set to 7400. I guess it. Then our stop loss will be at is it 500? Okay, let's use 500. Look at it. Look at this trade. Look at this trade. 24 is to reward. 24 is to reward. So if it plays out like this is a very good trade. About from here 535 all the way to 7400. I get it. That's about 1,000, almost 1,7400. Hold on, let me use calculator. 7,400 minus what? 6,535. 6,535. 865 pips. I don't care how long it takes. Since I have a market that is trending perfectly well, I'd rather trade that market than be in a market that is so confused, where I'm confused. I don't know what to do. What's it called? I'm not seeing a clear direction. You understand? So this is what I have for us on what's it called? Coming. Take all these things out. Actually clean. So I'd rather trade a trending market. I'd rather trade a trending market than trade a market that I am not well convinced about. So I would rather put my stop loss below here. At least I know I have 100 or 200 or even 150 pips so that I will not be stopped out. I guess it. But definitely, what happens for you to be 100% sure of this trade? Look at something. For you to be 100% sure, this was a previous what's it called, resistance, a previous support. This was a previous support. So let this be a fake out. The moment we are reclaiming it and we are not breaking below it, trust me, this is a conservative, very, very good entry. That would, if I was even using two lots, I guess I can change to 10 lots and put my stop loss below this area and just, now, even though I take a trade from here right now, I might still add more entries when I see that we're breaking above this. I guess it's coming back down, changing character back to the upside, here becoming liquidity. Yeah, I guess it's of course. On the upside, there are a lot of ways you can look at your market, trust me. Let me take all these guys off. I need to take all these debts off. So let me take all these debts off. Only a few minutes. So I'm taking all this debt off. Wow. Where did I do all this debt? Serious. Sorry, I was trying to take all this debt here off, but it seems it's not going up. So maybe we'll do them back. So what I was trying to tell you is that I'm trying to take all this debt off. So please bear with me. Please bear with me. I don't have time editing these parts of the videos out. So I'll just upload this as a raw video because Sometimes, all this editing, will make a lot of people, doubt what you're doing. So I just like putting everything raw on the internet for you guys like that. I guess without even letting all these, fundamental news, every other thing bother me. So I'll just, take all these guys off first and show you something what the market usually does. I guess where you should be 100% safe. So let's go to the Farley chart right now. Look at the Farley chart. We have this, bearish pressure trend line coming from the upside. I guess it. So the moment you see a market, I guess it, coming back or where we broke the previous support, come back and use this whole place as a fake out. I guess it. You should measure all your tools down. You can see the way I measured all my, had all my buyers down. What is happening? Why are these things not going off? So you can see the way I have my bias down. So the moment you are breaking above it and becoming this trend line and this support and resistance become area of value, becoming a very perfect area of value. What happens? You take your trades. These are things that you're supposed to wait for, not even here. Are you getting? You're supposed to wait until this happens, reclaiming back a previous area of value that corresponds with your structure. Wow. Finding it hard getting all these guys off. What's happening? Finding it hard. So let me just take this. You see that the structures are always there to tell you whatever it wants to do. So if you come back to probably the foundation, you see that this thing has been here as what? I'm really to get out this guys. Now this where what? This where price action. Seriously? This is where what? Your short patterns comes in. Short patterns traders. A lot of short patterns traders will consider this as a continuation what to the downside. Are you getting that? I'll show you something. That's why I'm taking all these guys off. But your higher time frame to your lower time frame is there to tell you what the market is doing. So for you to FOMO and running emotions, that's if you are running emotions, you actually don't know what is happening in that particular trade. It's not really running emotion is not really about you not wanting to lose money. Sometimes running emotions is because you don't even really know what is happening in that particular market. Yeah, you don't really know what is happening in that particular market. So I should go to the hourly chart, the 4 hourly, maybe 2 hourly chart. You see something. What are you saying if I should take even this guy off on the 4 hourly chart? Look at this is what? Now this is strange. This was a previous what? Support. Look at this was what? A descent triangle that has broken right now. So we're testing here, I guess it, and finding bearish engulfing or shooting star, any bearish engulfing candle, as in any bearish short candlestick pattern or a short pattern. If it's even a 15 minutes head and shoulders pattern, you should know that you found resistance again and come down. I guess need to take all these liquidities again. So is the market respecting these? What the fuck? Sorry. What's going on? Is the market respecting this head and shoulders pattern break and retest that is about happening right now to continue going down? Or is just going to turn here to, fake out and break back into it? And once it breaks back and continue. So it's good that you use your short patterns to, wait for your short patterns, break above, changing character to the upside, retest and continue going. But those markets are what? Very clearer than those sort of markets are clearer than what? Are clearer than what's it called? The short patterns, waiting for the short patterns to break and retest are clearer than just rising market structure. So it depends on your strategy. I get me. My strategy is saying that my strategy is I know what is happening in the entire market. I know my major areas of value to watch out for, to wait for before taking my trades. I get me. So I'm not actually scared because if this is surely 0.5, 0.618 retracement levels, and the market entirely itself is what? Bullish or trending perfectly well in the market structure on the daily or the weekly or the monthly, why should I think like, okay, um, this market has touched 0.5, 0.618 area. Why should I still have the mindset that, oh, this market is what is that? my my drawings are not going off. I'm sorry about that. So why should I think that, okay, this is not going to be a fake out last? This might just be to take traders that trade only short patterns without doing a proper top-down analysis of the market out. How? Because they only trade, what's it called? They only trade chart patterns. So they are looking for chart patterns. They have been waiting for this chart pattern for a very long time right now. And the chart pattern has actually broke down. Are you getting it? And it's coming back to retest. A lot of people are set, sell trade around this area and their stop loss around here. So what if, according to where I started from, what if the market actually, this was your entry? Are you getting it? Because market is retracing to 0.5, 0.5 area, bringing out a bullish engulfing candle, and also, coming back up here to retest. Now, you might see some sluggish movement around here, and you think, okay, the market is exhausted. We respect this particular, what's it called, descending triangle, which is a bearish short pattern, and continue going down. And, a lot of conservative traders a lot of aggressive traders have entered already around all these areas because arbitrary traders are waiting for here and place their stop loss above here. They've set trade already. But this might just continue going up. And I will only sell if this break to the downside and change character to the downside and come back and give me an entry if I will sell this particular sell. So I'll be waiting for 1, 2, 3, 4, 5. So I'll be trading only 4 to 5. I guess I'll be trading only 4 to 5 for this particular case scenario. That's what I've been saving me as a trader. I guess so. It depends. You just have to use your brain. I think trading is 90% psychology and follow your rules and your strategies. Aside from following your strategies, there are a lot of times where you see that the market is forming a fake out because a lot of people say that, okay, my strategy is a short pattern break and retest. Are you getting it? I'm seeing a descending triangle right now, which has broken down. So let me take a sell. That's my strategy. What is the entire market telling you? You don't do the analysis also to find out what the entire market is telling you before you enter your particular short pattern break and retest, which definitely is supposed to break and retest and continue going down. What if it has found its footing here already and is reversed already, and you are supposed to enter from here, you buy from here because you are seeing a descending triangle. So it depends on what the entire market is doing or telling you. So just apply this to GBPAUD. It's the same thing happening. I might not be able to do that particular analysis because I've spoken more than what I thought I would speak. So this is what I have for you today. GPAUD. Should I check GPAUD for you? Let me check GPAUD for you. GPAUD. If the time permits me. What's the time right now? I think I've spoken. Wow, almost 1 hour already. So let me try and go to GPAUD and maybe just 2 minutes and show you whatever is happening at GPAUD. It's okay. Look at GPAUD right now. We've broken a particular, area of value, and we might just come back and retest and continue going down. But definitely GPAUD is trending perfectly well also, like the others on the higher time frame. So if I go to the daily time frame, you see that GPAUD is doing well, trending perfectly well because GPAUD is in this particular move to the upside. So I'm saying a 0.5, 0.618 retracement level. So which should do be trading? You should go and check your Euro GBP to know the assets that is stronger. You're either in GBP and Euro. What's happening? GBP and Euro USD, which one is stronger? Are you getting it? That's when I choose the one to trade. So if Euro is stronger, I'll trade Euro. If GBP is stronger, I'll trade GBP. So I compare my assets by checking their particular pair. Are you getting it? Which is stronger? Go and look for GBPAUD or go and look at your fundamentals. Are you getting it? Euro GBP, Euro GBP. Which one is stronger? Look at the what's it called? The one that is stronger the most. Go to maybe your daily time frame and find the one that is stronger the most. GAP is strong, as in we are having what? A triple bottom here and waiting for a break and retest. So we're having a particular triple bottom that is happening. See a lot of traders taking. See what is happening here. Again, so this one bottom, double, triple bottom happening here. So any break above here, we're testing that particular support. I guess in the continuous market to the upside, or a break, if a resistance here, finding and breaking below this, continue the market or to the downside. It even happened at JP, I think JP, right? Is it JP or Euro? Euro USD. Look at same thing that is happening there right now. So you can just use your brain and find out whatever is happening. You look at the same thing happening here right now. Look at we're at a triple bottom that was supposed to what? Break above and continue going up. But instead, it broke down. I guess it broke down, tested again, continue going down. That's what I was trying to show you on the GP. Is it Euro GP right now? I've even done another analysis on Euro GP, and I'm also giving you a trade on GBPAUD USD. So GP USD is standing right now at our 0.5. What's it called? Entry level. So this is a very good entry to continue GBPAUD to the upside, or continue, coming back to find resistance and continue to this particular support again before continuing this market move to the upside. So look at your areas of value. Your levels are very, very important. Only trade from your major area of value. Don't FOMO. If you don't have a trade today, wait till tomorrow. If you don't have a trade tomorrow, wait till it gets to this sort of areas before you take your trades, because it will save you more. Are you getting it? To save you more. So I don't know. I'm expecting either a break above, reclaim it, and continue going up, or a break as in find resistance and continue here before going up, because I'm still considering this trend line from the bottom side of the market has been following up. I guess it coming back up, coming down, then continue, because a market is supposed to come and take all this liquidity by turning here, doing a deeper retracement to our, what do I call it? Our demand zones before going up. So I will just, use my bias and use my head to see this market, because of that's the same thing I checked at our Euro AUD also. I guess that I'm giving this trade right now, why we should put our stop loss at just 1.5 500. I guess 1.6500, just 70 pips from, or 71 pips from here. Not waiting, because this market might actually do continue to the downside. If it fails that little head and shoulders pattern, lower time frames do what they tend to do. What they tend to fail. Lower time frames tends to what? Fail. So if you are using your short patterns on lower time frame for your entries, you should know that once that particular short pattern is invalidated, that particular structure has been what? Invalidated on a lower time frame. So the only way they fail is because you're not following up, you're not saying them, you don't even know what is happening in between them, knowing that if this particular 30 minutes head and shoulders pattern that we have here, the test fails, that means you should take a sell. Now, let me show you something now. For a sell to the downside, because if it fails, that means we're coming to take all these guys out, take all these liquidities out, come back to these sort of areas, find entry again before continue going up, because this was the head and shoulders pattern that gave birth to. Sorry. Hi. I don't know what's wrong with my EURAUD today. This was a particular head and shoulders pattern that gave birth to this, this was where the whole movement started from to the upside that broke the structure. So if that's the whole movement that broke the structure, and this minor head and shoulders pattern is forming here fails, that means we're coming back down to this particular support area, this area of value, major key zone before going back up, because we will definitely come back and take this liquidity. But if it does not want to take it this way, you will also know also to continue going up or finding that resistance and continue coming down. So these are three scenarios I've given to you right now. So take your trades and put your risk and reward to it, knowing that you have a very good risk to reward, not taking a one-to-one right now and failing, losing that trade. Don't you now start saying that, oh, I don't want to do revenge trading. You should know that everything is not about revenge. Are you getting it? You have a plan already, knowing that if this uptrend fails and breaks down, you should take it on that trade. It can counter it to the downside. So that's not revenge. To me, I don't think that's revenge. Are you getting it? Because as it stands right now, we still have a resistance happening at the top, and the two major resistance are one, this major support, and this other bearish major trend. So it might come back or touch it, which also correspond with this supply zone because of this break of structure, then continue going down or will break above it. Aggressive traders can enter and retest. I get in conservative traders to take trades from the stop loss below here and put a proper good risk to what to it and continue trading, taking this market to the upside. So this is what I have for you. So if you're not taking trades from 535, you can still take trades from 697 on 7,000, what's it called? 666, is it 6700 to 7400, which is about 700 pips to the upside conservatively. This is what you're supposed to do conservatively. But aggressively, we can start taking buying trades all the way from here to the upside. Okay, so this is what I have for you is what's it called? 12:30 in the midnight already. So it's Monday morning. Asian session is open. I'm just doing this because I didn't have time to come online since on Friday. So if you want to trade, these are very, very important videos that usually comes out and plays out as I've spoken it, because this is how the market does what actually works. So my name still remains the CEO of Genex Limited. Take care and bye for now. Bye. 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 Any other further questions, ask me on my social media channels or DM me on my Telegram channel. Take care and bye for now. Bye bye.